So the other day I made a video about how you can use life insurance as a form of investment. Actually, I've made a couple of them at this point. Now, by far, the number one question in the comments was this, or something very similar to it. And some people were kind enough to actually answer that question by saying you can take out a policy loan, which is like a loan that you never have to pay back. And that's true, kind of. But it's not your only option. In fact, you really have 3 different ways that you can access the cash in a permanent life insurance policy. Well, I mean, 2, how you access the cash, and the 3rd, that's kind of different, but it's going to make sense once I explain it to you. So the first option, just like in the comments, you can take out a policy loan. And that's correct. Now, the policy loan does incur interest that does grow over time and starts to eat away at the death benefit. And in some cases, part of that policy loan might actually be taxable. So yes, you can do it, but just be cautious. The second option is what I would think is the easier one, actually. You can just take out the cash. Now, I don't mean like you go to the ATM and take out the cash, but not to get too deep into the weeds, but we talk about the dividends that get paid into a life insurance policy, okay? Those dividends go into, let's say, a separate bucket within the policy. Those dividends also generate cash, and you can take that out and keep the basic policy in force. You can also take out the cash from everything and just collapse the policy. But again, part of that might be taxable, so you gotta watch out. The third option is probably not as widely known by people. You can take that permanent life insurance policy and go to a few specific lending institutions and say, hey, lending institution, I have this asset that is worth X amount of dollars. Will you give me a secured line of credit and use this asset as collateral? And some of those specific lending institutions will say yes. The good thing about a secured line of credit versus like a normal line of credit is that the interest rate is lower, quite considerably in a lot of cases. So yes, because it's a line of credit, you still have to make your minimum payments and you still have to pay interest on the outstanding balance, but you don't have to pay tax. So there you go, 3 different ways that you can access the cash within a life insurance policy. You can do the policy loan, you can straight up take out the cash, or you can get a line of credit.